Well, thank you all for coming. Obviously, this is a financial planning meeting. Usually there's about 30 people here. It looks like we're about 15 today, so that's the interest on the financial aspects, it looks like. My name is Brian Hancock. I am with Edward Jones. I have an office at Hefner and Rockwell in the northeast corner there by the Crest grocery store. One of the things that Edward Jones does is we provide people with a number of different financial planning resources. We help people prepare for college savings programs. We do life insurance, mainly using life insurance as a retirement type tool. We also will help people with tax-free investing as well as other types of investing. And then, of course, we help people with retirement planning, which is what I'm here to talk about today. Now, many people think, well, retirement planning, it's pretty boring. The next 15 minutes are going to be the worst of my life. But I like a little bit of audience participation, so what I have planned today is to basically try to get you a little bit more involved. So if I feel like I'm losing the audience, I will break out the best dance in the world, best dance moves in the world ever book, and we will learn a few dance steps to wake you back up. If that doesn't work, I will be doing a rap battle a la 8 Mile style. Dave Tran, I'm looking at you. You're going to be one of those people. No, you will get up and you'll rap some lyrics for us, just like you did the other night at the Northwest Taste of Oklahoma. So anyway, back to the audience participation part. What I'm here to talk today about is retirement planning. So by a show of hands, who wants to work until the day they die? In other words, you clock out at 5:30, you leave the office, and you just walk out your door and you're dead. Anybody? Usually one person jokingly raised their hands and I excused them, but since that didn't happen, let me rephrase the question. Who is thinking they're going to have to work until the day they die? All right, usually I get a few more hands. All right. Who wants to be able to retire before that happens? There should be every hand in the room should be sitting up. All right. The reason I ask that question is because the answer to that question, or the fact that you want to retire, should be reason enough for each of you to want to plan for your own retirement. So that begs the question, how do you plan for retirement? How do you get there? The first part of that question is a little bit more difficult to answer. That requires a sit-down conversation with you and me, because everybody's retirement goals and plans are a little bit different. One person may want to travel when they retire. Other people might want to stay home and watch the grandkids. Some people might want to work in retirement. That question requires a little bit more discussion. But how do you get there is a little bit easier, and that's what we're going to talk about today. So how do you pay for retirement? The number one thing that people will tell me that retirement planning is Social Security. Now, by show of hands, again, audience participation part, who thinks Social Security is going to be there when they retire? One guy. One guy has faith in this government. One guy has faith in this country. It will be there in most cases. I'm 99.9% certain Social Security will be there in some aspect or another. It may not look then what it looks like now. At some point, some administration is going to have to revamp Social Security, but I do believe it will be there. We've all been paying into it. But Social Security was never intended to fully fund your retirement. In reality, it only basically gives you enough money to afford about, on average, 40% of your retirement needed income. So there's other things that might help you out with retirement. One of those, as I mentioned earlier, is part-time work. In a study done by J.P. Morgan, 67% of people polled that are 5 years from retirement said they plan on working in retirement. In reality, that's actually only 27%. That's kind of what the figures show us. People plan, but they don't execute sometimes. The other places you might get retirement income from, maybe you worked at a job that had a pension at one time. Now, pensions have kind of gone the way of the dodo. They don't exist in very many companies. Only about 13% of companies offer pensions anymore, but maybe you're lucky to be working for one of those companies that does. The other thing that comes up all the time, especially here in Oklahoma, and apparently I'm the only one that doesn't get it, but mineral rights. Mineral rights sometimes afford you the ability to have some retirement income. And then last but not least, hopefully somebody will leave you some money when they pass away, a little bit of inheritance. But the rest of it is going to have to come from you. So when I talk to small business owners, the thing they tell me that how they're saving for retirement is through their business. Not necessarily saving in a retirement plan, but their business is their retirement plan. So I know some people are like me, they work for a big company, but they operate like a small business. But for those of you who are truly small business owners, how many of you are planning on selling your business for part of your retirement income? All right, 1, 2, a couple people, good. So the problem with that, there's lots of questions, and a lot of questions you don't have control over. How much it's worth, when are you going to be able to sell it, how long is that going to take, are you going to have to finance part of that? Is it going to be, because a lot of times when you sell a business, the owner has to finance it. And the number one issue that business brokers tell us today about people who sell their business, the number one issue that they have is valuation. A lot of times you've put your heart and soul into your business and you feel like it's worth a whole lot more than what it's actually worth. So it really comes down to your cash flow, in other words, which I think what you're going to talk about here in a little bit, cash flow in your business, and the cost or the value of the things that you own, your product that you may have left over your inventory, the business location, the building that you might be in, those types of things. So a lot of questions, but you are essentially then an investor in your business if your business is part of your retirement plan. So as an investor, it's important to be diversified. That's the number one thing a financial advisor will tell you when it comes to planning for retirement is be diversified. Don't let your business be your whole plan. So to diversify, one of the things that means is that you should be doing a retirement plan. Now for some people, that might be as simple as having a traditional IRA or a Roth IRA. For others, that might mean a business retirement plan, and that's kind of what I want to focus on today. So there's a couple of different advantages that you would get from doing a business retirement plan. The first one is the most obvious. It is the fact that you are able to save for yourself for retirement. That is very important, to save outside of your business for yourself for retirement. The second is that you are able to attract employees because you're allowing them to have the benefit of saving for themselves in retirement. When you look at the results on monster.com, the number one item is salary, number two is where the job is located, and number three is benefits. That's what people look at when they go get jobs. Health benefits, insurance benefits, and of course retirement planning benefits. So another thing is increased productivity. If you tie the retirement plan into the business's success, then you're able to help increase your productivity through your employees because the bigger bonuses they're going to get in their retirement plan come from better results in the business. And then the number one reason, and Stephen can probably tell you, Stephen Wade with CPA here will probably tell you, are all the tax benefits you get from doing a retirement plan. So you get a tax credit for your first 3 years in most cases, and it can be up to $500. You are able to deduct the contributions from your taxes that you make into yours and your employees' retirement plans. You get salary deferrals, so you're taking your salary, you're deferring part of that. It might lower your income, your taxable income. And then lastly, you obviously get tax-deferred growth and a retirement tool, so that's obviously good. So when you think about a retirement plan, and this gets us into the dancing part here, because I look like I'm starting to lose a few people. But when you think about retirement planning, there's 4 things to think about. The first is your own retirement goal. What are your goals? What do you want to save for retirement? That's the first thing you have to answer. The second thing is employees. If you have employees, are you going to want to contribute to their retirement plans as well, or are you only going to allow them to contribute to their own retirement account? That's number 2. Number 3, give more. You have to give more. Are you willing to give more if you want to maximize your own contribution? Sometimes if you're able to provide for yourself a little bit more, but sometimes it means that you also have to give more to your employees. Are you willing to do that? And then lastly, like with everything else that you do in business, cost. You have to consider the cost. If you're wanting to save more for yourself, sometimes that costs a little bit more. So there's some gives and takes with cost that you want to consider. So let's break out the dance lesson books. Right here on the front, in everybody's table, you've got the best dance moves ever. Everybody get up. No, I'm just kidding. Don't ever get up. We're not going to dance. But I do want you to open up to pages 4 and 5. So this is a book from American Funds. American Funds is one of our helpers with retirement planning, and they provide this to us. Now, Edward Jones has a book, and I brought a sample with me if you want to look at it, but this is a little bit easier to take into consideration. These are your dance steps to determine what retirement plan might be good for you. So this is pretty simple. The first thing it says is, do you have employees? Yes or no? If you do have employees, are you going to contribute to your employee accounts? As you work your way through this grid, this graph here, and you get down at the bottom, it'll explain some of the different plans here at the bottom. Now, it's a little bit more involved what we would go through if you come and sit down with a financial advisor on what plan might be best for you, but this is a pretty simplistic way to determine. The other thing that this book does that's very nice is it tells you the different dance moves, the different retirement plans, and tells you a little bit more about them on the following pages. So the first one there on page 6 and 7 is the 401k plan. This is considered by most to be the most flexible option when it comes to business retirement plans. You have a lot of different ways you can save in 401ks. It's not just simply a 401k. There's different degrees of 401ks. You can have a solo 401k, a Roth 401k. You can have a safe harbor 401k. The thing about 401ks is they do require some form of IRS reporting, so in most cases you have to have a third-party administrator help you with that. Third-party administrator is somebody who helps you with the legalities of 401k programs and will help you with the reporting to the IRS. They do have what I would call a middle-of-the-road contribution limit, and that's over here in the little blue box on the right-hand corner. You can kind of see what those contribution limits are. The next one on the next page is a simple IRA. Now, most people think simple is simple. It is. That's the whole reason of the acronym. But the simple stands for Saving Incentive Match Plan for Employees. Believe it or not, somebody came up with that really dumb acronym. But it worked out. It's called a simple IRA. The reason it's called simple is because it's a little bit lower cost, and it does away with a lot of the IRS reporting requirements that you have to do. Now, one of the things about a simple IRA is, as the employer, you do have to contribute in one manner or another to your employees, either by matching contribution or by making a contribution on their behalf. So that's something that is required with a simple. The next one is a SEP IRA. A SEP IRA stands for Simplified Employee Pension Plan. Now, a SEP IRA is typically intended for somebody who has 10 employees or less. It does have a very high contribution limit, as you'll see down there in that little green box. One of the better contribution limits that you have, either whatever the lesser is, 25% of your salary or up to $53,000. So this is typically intended for people who run their own business and either their own employee or only have a couple of employees, but it does allow a lot of flexibility. It allows you to contribute if you want to or not. If you don't want to contribute for a year, you don't have to. So there's a little bit more a little bit more flexibility with the SEP. And then the last page is the payroll deduction IRAs. This is where I had mentioned maybe your retirement plan can simply be done by doing by doing a traditional IRA or a Roth IRA. It has the lowest contribution limits, but likewise it also has the simplest way to set it up. So that's kind of a high-level view of the different plans that are available.